Welcome back to the channel, Crypto Trend Trader with a quick update on Bitcoin. But before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. I'm just going to do a quick little throwback to my video from February 7th. We got a lot of new people on the channel, and I think you need to hear this.
You're looking at it from a weekly standpoint. One of the entry signals here is when we get the cross right there, which was at that $5,200 range. That's the entrance of like a long-term time frame. Uptrend. And then same thing here. We defended the cross there, but then when we got the cross here, that's saying essentially we're in a downtrend, and you would basically sell here, and that's where you get like that capitulation dump. And that's what it's hard to say which is the catalyst for the other, but essentially you can see typically in price action how they respond. And now here we are at the weekly, and we're getting that cross over here. You could say that here, like the big movements were in response to the cross happening down. So now the big movement's gonna happen in response to the cross happening up. But we could easily get another powerful candle up to here, sell off, and come back down below this, and then get the cross straight back over and reject it, and it was a big fake out. That's why I say that you have to be skeptical, and you should be entering like periodically with your capital. Like you shouldn't just be saying like a light switch. Okay, it's on. We're in a bull market, and you turn it on, and you're 100% all in now, like leverage. No, you should step into it like anything. And yes, you will potentially lose out on some gains along the way because you could have just entered all of it at 3,500 and now you're just stepping in as we confirm. But the problem is then is that you're risking so much more. As where with this, you're essentially not risking nearly as much of your capital because you're stepping in and you're already having gotten gains along the way, and it becomes less and less risky as a trade over time as like you get multiple confirmations. So like one confirmation is good, and you might be like, okay, I'm going to put in 10%. But once you have 2 or 3 or 5 is when you start saying, okay, I'm risk on this asset like long term, looking for like months or years of potential like positive price action. And if something happens in the meantime, that's fine. We're active traders and active investors, so we can make changes along the way if we have to. But we don't want to be flip flopping every day like a lot of other people are. And that's what this is about. That's what this channel is about. This is about trending trades, long term gains, and positive investments. And now we may take some trades along the way inside of these long trending trades, but the point is that we're trading with the trend. And now as we can confirm this into a weekly uptrend, we can potentially start taking like long trades, and then every time we get a dip now, we're trying to take a buy, and then we're making gains on the way up, and then when it sells off again, we're investing more as it sells off. As we're in here, every time we're selling off, and then we get the pop up. Instead of buying the bottom necessarily on the way down, you're trying to sell the top on the bounces because the price action is continually taking out the lows, and that makes it an external retracement. And now that's what we're looking for right here is that external retracement. We came down here and sold off, so this is still internal until we take out this right here, and that's why that's so important. That's how you confirm that the trend has flipped over. Are we getting a total when it's all said and done? Is price action ending up positive or negative? And if you go from here up until right now, if we were to close, we could say the price action is now positive. We took out the high from before, we sold off, we took out that high, so now price action is positive. So now we're on an external retracement from this high here. So now what we do is we look for the next like clear swing high on the time frame we're looking at, and now we look at the internal retracement of this, and then we look for potential reverse points of this, and then when we take that one out, that's it. We've essentially made it back to the top, and then we would go back to the 20,000 swing high, and then we're looking for our retracements from there. And that's why it's so important is because we essentially reversed off the 618 of this move right here. That was the 618 retracement of this down. So that was the internal 618 of the 20,000 high was here. If this was going to continue to be a bear market, what we would expect to happen is the 618 internal retracement of this wave down here. So we would look for this to come back up to the 618 and then sell back off and then potentially go down to a new low. But that's why taking out this swing high is so important, because then we can go to the next relevant swing high, which is this one here. So, and that's why I say that you don't really know confirm that you're in a bull market until the blue sky breakout when you take out the previous all-time high. And there's lots of different ways you can do it, and that's not necessarily saying you don't put any money in until we take out 20,000, but in all actuality, depending on what your trading strategy is, those are the ways that you confirm essentially based on moving averages, based on like resistance, support, previous highs and swings, and then like Fibonacci retracements. That's how you take, essentially identify if you're in a long-term bull market, long-term bear market, shorter term uptrend or bull trend, or shorter term, bear trend or downtrend. So there's a little technical analysis. We're still at a crucial point in the market here, and like I said, we're looking for that close because it's not unrealistic to think that we would find that resistance here at the breakdown point, retest it, failed, and come down and put in a higher low, and then move up and get this inverted head and shoulders, and then take this out, and then again start focusing on this swing, or potentially get that rejection here and come back down and put in a new low off of here and come down and find support again on the 200 moving averages, and then finally get the potential move up, or even break through them and get a bounce fake out and then sell back to a new low. I mean, who knows what's going to happen at this point in time? That's all very far in the future, but we're very close and we're very focused on what's going on right now. And this little bit of price action inside of here again is very important, but it's not worth the risk to reward ratio of essentially being at that crucial support. You can manage your buys and sells, like your longs and short trades, off of this support, and this is or resistance, depending how you want to look at it. And this is a very good place, to take longs and shorts if you know what you're doing. But at this point in time, you have to realize that we're also at the high end of this range. We're at the top of essentially what we would expect this move to be based on Fibonacci, based on support, resistance, all kinds of different factors. So Confluence says that there's a very high likelihood that we would in fact sell back off here and come back down, and then we have to reevaluate everything. So based on and this is the final point before I let you guys go today, is, don't forget that market movers and market makers and whales have access to all the same things that you do and more because they're whales, because they have that money, they have market research, they have all kinds of things that we don't have access to as, traders. Even if you're a full-time professional, you have, the best software that money can buy, you still do not have access to the same resources, that the whales and market movers and market makers have. So, to think that they don't have access to all this and see what people are saying and see what people are thinking and what the masses are doing and the ability to move price to create liquidity so that they could put in a massive dump. If you honestly don't think that, then you're delusional in this market, because this is a perfect example of it. That's a perfect example of creating liquidity, creating a massive pump so that they can dump a huge position.
I know people don't take the time to go back and like watch my old videos and stuff like that, or I do put out a lot of content, so it's hard to like keep it all in perspective. But that was a very clear, like, I don't even know, 5 or 10 minutes of me basically just explaining, why that was about to happen, and why that was a very dangerous place. But I mean, that's it. I just wanted to do a little recap video. I'll be back with my regular content as always. Like I said, we did get that massive dump today again in the traditional stock markets, and gold and silver is still taking a hit. I've been saying it forever. Liquidity, cash is king. So stay strong. But invest in yourself, invest in your future, and the best thing to do during like recession, depression era is to basically like minimize your costs as much as you can, your expenses, and essentially just like hunker down and grind, and try to basically once we start confirming that we're back on the uptrend, try to invest in those assets, and essentially make that life changing wealth on the way back up. But in the situation as we have it right now, it looks like continuation, and there's no reason to think that any of these markets have bottomed out, and then we're not going to continue to see like massive sell-offs or at least like wicks. But until we see something that tells us this trend is reversing back to the upside in any of these markets, we're going to continue to trade with the trend and assume that the trend is going to stay down. Crypto trend trader, I'm out of here.